So
Hey,
our next session, titled From Surviving to Thriving, Reimagining Banking Services in Light of COVID-19, talks about the changing face of banking services in the new world. So this panel is moderated by Chetan Parekh, partner, Cedar Management Consulting International, who is joined on this panel by Anuj Kacker, co-founder Freo, Rachit Kumar, Chief Digital Officer in Solutions Global Limited, and Remco Veenenberg, Head of Strategic Relations, Ondato. So over to you, Chetan.
thanks, Gitanjali. So good afternoon, everyone, and pleasure knowing all of you. My name is Chetan. I'm a partner at Cedar Management Consulting. I advise neobanks and banks on reimagining their services. So great speaking on surviving and thriving and moderating this session. I have an esteemed panel with me, starting with Anuj, who is co-founder at Freo. Anuj, you want to quickly introduce yourself?
Hi, thanks, Chetan. Thank you for having me here on this panel. Excited to be here. Quickly, Freo is a consumer neobank based out of India. We've been in business for a few years, and I think neobank and digital banks need no introduction in some sense. But our key thing that we take to the consumers is that not just giving people, the ability to open bank accounts, but we have many other products that we've built over the last few years, from pay later solutions, cards, credit, loans. So we consider ourselves as a full service or a full suite neobank, if you will. And that's the way we think about how Freo is going to function over the next few years. But that's my quick short introduction. Let's move on to the next set of panelists.
Thanks, Anuj. Moving to Rachit. Rachit is the Chief Digital Officer. Rachit, would you like to introduce quickly yourself?
Thank you so much, Chetan. Hi, everyone. My name is Rachit Kumar. I'm the Chief Digital Officer at InSolutions Global, and we'll refer this ISG all the time now. And ISG has been a payments company and a key innovator in the market for the last 20 years. And it has products across the issuing and acquiring verticals, and also very, very strong in RegTech. We have been managing about 50% of the merchant portfolio in India, and also have a significant position on card issuing and UPI transactions as well. It is a privilege to be there in the panel with the esteemed speakers, and look forward to this discussion. Thank you.
Thanks, Rachit. Over to Remco for you to introduce yourself.
Hi, everybody. I'm Remco from Budapest. Warm regards. I'm head of strategic relations at Ondato, a company that is trying to turn compliance into an advantage. We provide an end-to-end platform so that neobanks and all financial institutions, but also other markets, can avoid fines by increasingly heftier fines from the regulators. So that's shortly from my side. And I love neobanks, so I'm looking forward to hear from Anuj.
Absolutely, Remco. Thanks so much. So I think it's a very interesting topic we are discussing today, around from surviving to thriving. And as all of you know, COVID pandemic is coming to an end, and banks are coming back with new realities in terms of much higher NPA, job loss claims, a very different market and a high growth market, because any kind of a recovery is quite fast. So let's understand, when we are reimagining the banking services, what's the new realities? And I'll really invite Anuj to speak about what is the key expectation from customer in the reimagined banking services.
Sure. Maybe I'll take a little bit peek in the history of banking to maybe formulate my answer. Probably give some more context. Prior to the 1990s, about 95% of bank deposits were in public sector banks. Post that, the private sector banks led by HDFC, ICICI, and so many others, who are very much valued companies in the Indian stock market. Those guys came about, and today, if you look at it, about 30 to 35%-ish is their market share of deposits, right? So, and essentially, what the difference was that they just provided better services. They had a branch-based model where a customer would walk in and get air conditioned and be able to get a token and stand and get inside rather than standing in the hot sun outside. They had phone banking services. Of course, it evolved. It was not there, say, 30 years ago, but it's there today. They had credit cards or cards for that matter. They looked beautiful. That people had, it was aspirational for a middle class Indian customer. People had, you could call up and you could now get into SMS-based, services of your product. There's a relationship manager where a guy would, in a nice suit and tie, would address your concerns and talk nicely to you in your language, whether it's English or Hindi or any other regional language. So essentially, better products and services is what people will adopt as you go along, right? And it doesn't matter in whatever sector you're in, banking or telecom or entertainment, doesn't matter, but better products and services will always take front, right? Now, what's happening in the when you talk about banking reimagined, especially post-COVID, is there's a joke going around, right? That the COVID has been the chief digital officer of most of the banks in some ways, right? So it's forcing people to figure out what are my digital strategies, and the banks are super smart folks, right? We deal with all of them, and they are the sharpest people, and some of the sharpest people in the industry, right? So they understand what it means, but it's not necessary that they will probably move in the same speed or the same space as most of the fintechs might or neobanks might. So my belief is that the customer today is thinking that, hey, I can open my phone and order groceries in 10 minutes. I can get a cab in 5 minutes. I can transfer money in an instant via UPI. Why is my money so difficult? And that is the question where at least we started about 5-6 years ago with Freo. And if you look at the customer's need, right, and I'm taking a little bit of a separate view, and I'll join them together. But if you see it from a customer's need perspective, right, he first or she needs a bank account. Once you have a bank account, they need to get payment solutions. UPI has come and solved that in some ways. Once they get payment solutions, they need credit solutions to better in life, right? Whether it be credit cards, loans, home loans, gold loans, so on and so forth. Now you're moving up the ladder. Then you need insurance, right? So that, I'm slightly well off. Can I afford health insurance or life insurance? And then I want to go invest my money, so that's like at the hierarchy in some ways. So everybody will go through that cycle. Now, with the advent of technology and the Jan Dhan Yojana bank accounts, the Aadhaar and mobile, the JAM Trinity as they call, which is the Jan Dhan accounts, the Aadhaar and the mobile internet penetration, people have moved up that ladder of having bank accounts, payment solutions very fast, and now they're getting into the credit cycle. But today, most of the banking services is still was very branch led. And today, if I want to go and if I want to add my wife as, by the way, if I want to add my wife as my joint account holder, I have to go to the branch with her for a signature so that they can see she's my wife, and that needs to get done. So now people are questioning that, why can't I have everything in the mobile? So if I have my needs from bank accounts to wealth, and from a business standpoint, the customer evolution is happening on the mobile phone, why can't those two be joined and become a bank on the mobile phone for me? And I think that is where the thesis of a neobank, etc., digital bank, it's played out in the Western world, in Europe, especially with PSD2, very well. It's played out in some parts in the US as well, but not, not necessarily calling them as digital banks. It's playing out right now in Southeast Asia very high, because in Malaysia, Singapore, digital banking licenses have been given out. It's playing out in the Middle East right now. So I don't think that our regulator will be far away, because they need to be in step with what the customer needs. And we need to answer that question of, how can I access money in various forms, whether it be credit, non-credit, insurance, non-credit, investment, non-investment, at a click of a button. Now, I don't want to get into the regulatory aspect of it, but that's a separate topic, Chetan, you want to cover. But at least I wanted to cover this from a customer's perspective, how it is getting reimagined in the post-COVID world.
No, Anuj, I think very, very interesting thoughts on reimagining it as a mobile first kind of a bank. And that's what you're looking for. Now, let's go to Rachit, who looks at it from a chief digital officer's perspective. And Rachit, it'll be really interesting to understand what does it mean in terms of onboarding when customer is expecting mobile first experience at a full bank. How do you see onboarding changing in terms of KYC, in terms of liveliness checks, and so on and so forth.
Thank you so much, Chetan. So as Anuj has just pointed out, I think what the customer now wants is agility, is the right word, in terms of how can he get onboarded very quickly. All his KYCs should be done electronically rather than he visiting some centers showing his Aadhaar cards or other PAN cards or other identification proofs. I think what is important is that we need to catch the customer as he comes. And that's what is the mantra right now in the market, wherein the customer comes in, provide him all the information upfront, wherein he should be able to fill a simple form, does a KYC of his credentials. And then, as most of the banks and others are also moving towards, is like a video KYC, wherein we can actually do his authentication then and there itself. And within 5 minutes, the customer is able to start transacting. Now, having said that, there are certain pieces that has to tie in very well together in order to have that offering to the customer. One of them, which is very, very critical, is like how your application ease of application in terms of accessing it. The UI UX, which is provided to the customer in terms of how simple it is. It should not be it cannot be a complex UI for the customer, because as soon as he actually gets into, he has to like it. He needs to understand how quickly I can actually do the things and how quickly I can start transacting. So it has to be very interactional with the customer, wherein he gets a response, this is done, this is done, this is done. So that comfort factor starts right from the way go. That's number one. Number two, I think, what is the gamut of services that we are actually offering to the customer, as Anuj also pointed out earlier, in terms of right now from a simple banking to credit, to loans, to other activities, insurance, etc. So what is happening, one of the few neobanks, as we call it, or digital payment banks, I think that's the key differentiator. We're not going to that public sector bank which will make you wait. In the pandemic, I think the whole world has evolved. I think that's very, very important. And we have been watching this very, very carefully over the last couple of years, wherein the people are not interested in standing in any queues in the branches. Everything has to be on mobile and everything has to be very quick. Now, at the same time, as a digital leader in this whole space, we are very, very cognizant of two things. Number one, the personal data of the customer cannot be compromised. That's the underlying truth that we have to always manage. And number two is the security. So if we have taken care of the UI, if we have taken care of the security aspect, and if we are able to offer our services to the customer on the fly, I would not call it on the fly, but maybe he has to build over a portfolio over a few days instead of months, I would call it. I think that's what the comfort we are now looking at with the new age customers. The other thing which is very important, which we have to take care of, is the advent of the new gen, which is kind of have completely taken over the way the banking works. The new age groups, the younger guys, they are not the traditional approach people wherein you will actually approach them via people. It has to be approached via apps. It has to be approached via messages. We have to provide information on WhatsApp in a secure way or on emails. I think that's the difference that we are going to make. So the omni-channel experience, as the word that I would like to call out, has to be provided right now. Be it across onboarding journeys, or be it across customer service, which is also very key, wherein the customer should be able to actually put a service request on the mobile, gets a response back that it has been registered, and somebody agrees on a turnaround time as to when this will be resolved, and he gets connected, even virtually, to a bot or to a customer service officer who is able to handle his service requests. So I think all in all, what I'm trying to say is that right from the onboarding inception to the services that we are providing, at the end of the day, how are we handling customer services is something that we have to take care of in this whole new world, and that's what is making a large difference in the new post-pandemic world.
Rachit, I think very interesting Chief Digital Officer's perspective, and completely hear you in terms of experience and millennials. Now let's look at what banks are famous for to ensure a great compliance and being compliant. So I think, Remco, it will be interesting to understand, what's your view, because you and your team are working to turning compliance into an advantage. So if you can just see this problem from a very different perspective and see how can this be reimagined from a compliance perspective.
That's a very good question. Just to reflect a little bit on Rachit, I think that a smooth onboarding process is also a part of a compliance process, right? So we provide an end-to-end compliance platform, and what I believe is that the least steps possible to onboard a client as soon as possible is going to be key in the future. And what we've seen in the recent months, and even before COVID, just to give a bit of reflection about the European market, we've all heard about companies like Revolut or N26 or many of these other neobanks, as you call them. There's a difference between a neobank and a challenger bank, meaning that the neobank operates under an e-money institution license and a challenger bank operates under a full banking license, meaning that the regulatory requirements start to increase. After COVID and during COVID, neobanks became even more popular because the whole brick and mortar approach completely disappeared. As highlighted earlier in this discussion, we've seen a massive increase of digital banks in Europe, but we've also seen a massive amount of regulatory fines in Europe. So a proper compliance platform that can avoid hefty fines. As we saw recently, there was the German regulator called BaFin, has actually halted N26 of its amount of customers it's able to onboard per month. So we see that this is becoming more tight, and the security regulatory concerns are ever increasing. So what we do is we provide an end-to-end platform that goes from verification to identity management to biometrics, and make sure that there's just one place where a compliance officer can make sure that the whole process, the whole KYC, KYB process, onboarding process is managed. Now, what I think, just to give a bit of reflection on some other things, compliance and in general, regulatory requirements are just going to get only tighter. I would actually be interested to hear from the other speakers, if there's room for it in discussion, how this situation is developing in India. Because in Europe, it's becoming more difficult. For example, right now, if you want to onboard with any of the bigger neobanks, they will immediately ask tax number. It needs to be verified. There's still many loopholes in the whole regulatory environment as well. And one thing that I want to highlight, which is interesting, one of the, it was already mentioned by Anuj, by PSD2 and open banking, all of these developments are going to play a key role in the developments and the compliance. However, PSD2, as some other of the EU regulations, wasn't rolled out that properly. It was a little bit unclear for a lot of companies and banks how to actually use it. It's the same as GDPR, to give that example. In terms of neobanks, I think that the future really lies with smooth onboarding, making sure that all regulatory requirements are met, that there are no loopholes, and we will see an enormous rise of more neobanks in the next coming years. I don't think that traditional banks will disappear in that sense. They will always be there, because when it comes to more complicated products like insurance or loans, you need a really proper onboarding and compliance platform in order to support such a thing. But the whole FinTech world is right now, I think, responsible for what I call banking the underbanked. And this is really where compliance plays a key role. If we can give financial services to people who have no access to it normally, we can really make a difference as an industry. That's my take on it.
Very interesting, Remco. And Anuj, I'm coming over to you because I think it's very clear that it's mobile first. It is going to be digitally driven because of convenience, and it needs to be extremely secure, as articulated by Remco, from a compliance perspective to avoid fines. Now, when you reimagine this in an Indian situation, where government had taken some very early steps with respect to identity and KYC, ability to authenticate using Aadhaar, which is a local nationality card. How do you see the business model in terms of attracting customers, the millennials, and really the people who has deposit, which is what the interest of the banks are. Banking is beyond just the pure payments. They really are looking for balances to come in, books to grow, and at some point, as you rightly said, loans, which is where they can really start making a good amount of interest income. So how do you see this from a business model perspective beyond convenience? Do you really see service differentiation? Do you really see product differentiation? What to drive the growth?
Sure. The question you ask is the question we get asked by our VCs all the time. So it's definitely relevant. But you rightly pointed out that you need to peel the onion a little bit more to figure out really whether it's going to make sense from a financial standpoint or not, right? And there are multiple aspects to it. One is on the business model side of it, and second is from how the regulatory government standpoint. And I'll try to cover both because both are important. Just by getting customers with smooth onboarding, and of course, both Rachit and Remco talked about this, but fraud, for example, is also such a key part because in India, for example, 800 million people have bank accounts, but more than half of them are inactive for that matter, right? And there could be a lot of people who may not be using it. So it's not that people don't know how to get a bank account, but as startups, as younger companies, as they go as neobanks and digital banks and they start getting customers, you need to be able to figure out and go beyond just getting the customers and what is the LTV of this customer. 70% of any bank's revenue comes from credit and other sources, not from the deposits. Right? Deposits is just helping you drive down your cost of capital so that you have better margins to play out, right? It's not going to give you money per se. So, and in a neobank or digital bank where you don't have a license, you are working with a bank at the back. So the money that you can make on the deposit is not going to sustain you over a period of time. Right? You need to do more with that customer. So anybody who's just has a customer acquisition strategy is going to probably be, will face headwinds in some ways or the other, right? We've seen this happen across the board, whether, in the heyday of 5-7 years ago, where you just spend money in getting customers, for example, right? I remember when I was in the telecom world 10 years ago or 12 years ago, when there were 12 operators, you were just acquiring customers and then, you monetize them because you charge differently. But there's a huge cost drain that happens when you're just acquiring customers. For example, today Freo is in about 1,000 cities in India, by the way. We have products in, we are able to serve 1,000 cities in India. But the guy coming to me in the 973rd city is probably not necessarily English speaking, but he or she has the same need of being able to, deposit money, spend money, and borrow money. So the business model is very straightforward, that you need to be able to get customers to put some money with you so that there is some, they also feel you can get some deposit interest rate and there's some confidence and there's some trust built. But at the end of the day, you need to be able to give them other products where it'll make money. Revolut did that very well, as Remco pointed out, where they started giving Forex. So Forex makes money. Investments makes money. And definitely an investment maybe up to a smaller percentage, and insurance maybe a smaller percentage. Credit makes money. Credit card penetration in India is very small. So unless and until you're able to close the loop on all these three things, you are not going to be able to, go the distance. You may be able to do it for the first year, second year, maybe a couple of years, but you won't be able to go to the distance. And the regulatory aspect is important because, we have seen what's happened with payment banks, for example, right? A lot of people took the payment banks and they gave it back the licenses. They were not allowed to go beyond a certain limit. They were not allowed to lend for argument's sake. So then they had to come up with creative ways to make money. And that's the reason why, not necessarily all the payment banks have been able to, do well, right? Some of them have given it back. Some of them are doing it for very different reasons. So the regulator understands this. They understand that if I don't give you a business model that's sustainable, you will not survive, and then the policy goes for a waste. So my view is that they will come up with policies that will allow all of that to happen. Then it's up to the bank, the neobank, the fintech, the company to be able to offer these services in a smart manner, and not just focus on customer acquisition. Because that is, it's a 1 year, 2 year game in this business. Fraud itself will kill you, even as much as you do the KYC, for argument's sake.
Oh, I think Anuj, very interesting points. And coming to Rachit with the products, and Rachit, you've had a deep experience in payments and how payment banks survived and thrived in India. Of course, they all went through a listing now and have gone through a bit of a cycle. How do you see both deposits and loans being launched, and what you could see as a differentiator the new imagined digital banks can use?
Sure. So I think as the other panelists have been talking so far in terms of how do we handle the deposits and loans, I'll take the loan example first because that's very interesting. Deposits is very traditional. So what has happened in the whole fintech space, and I would call more fintech rather than the neobanks, because fintech is the prime leader for any kind of loans business, and that's what is successful for some and not so successful for others. So I think what's important was that how was the access to the monies being done from the service providers, or the NBFCs, as I would call it, who would be able to provide those loans to the fintechs, because fintechs per se were not the back end for that, and were only providing us the front end channels to actually handle those loans and make it more quicker as compared to what fintechs would have, whether the banks or the NBFCs would have done it. I think the challenge was a few things. Number one, in terms of the eligibility, in terms of how and what kind of loan could be offered, and the traditional way in which CIBIL and other such rating agencies was working at that point of time. And they were only talking to the banks, and it was a bit difficult to actually get those integrations done. From a digital perspective, I think the scenario has changed, specifically for those loans wherein the fintechs and the NBFCs, where they have gone ahead and integrated with the CIBILs and the other experience of the worlds, etc., will provide the right score, and basis which we are actually able to catapult the business to the next level. This was not seen earlier before pandemic, and during pandemic, I think the whole market fell down by about 30% to 35% in terms of loans. It is regaining with these new integrations that are now happening with these fintechs, and the service providers have come together to start working in terms of providing the loans, and the loans have started increasing now. The other challenger to that whole concept in terms of retail was buy now, pay later. And everybody has seen it's another form of loan, very interesting. It's also to some extent challenging the regular credit card business. But as the regulator is now coming a little more stronger on these points, I think we will have to do a watch in terms of how these loan and other portfolios are emerging at times. Having said that, what my thought on the traditional deposits would be, they have more or less, in my opinion, remained the same over these neobanks. I think the customer acquisition is the key differentiator, as we have talked about earlier, in terms of the ease of doing those initial acquisitions and initial gathering of the funds from the customer, and how do we actually pitch the right kind of rates. There are advantages, as you have seen, these new banks are provided in terms of the deposits, which is a little better than the traditional banks which are existing. Having said that, I think the focus over the last couple of years, and now we are kind of moving away from pandemic, I think it has been the loans portfolio has evolved and is increasing. The fintechs, the ones which are very much close to the regtech and have been able to survive those regulators, and have been able to do the right kind of integrations are on the rise. However, the ones wherein the business case was not that strong and the technology investment, etc., was a challenge, and also the RegTech was a challenge, are there no more, and they have kind of given away the licenses. So I think that's what my view is. This is a very, very regulatory, very regulatory own market, wherein the regulator has the word, and I think all of us, including the digital banks or the service providers or the other NBFCs, have to come together to make this successful.
Thanks, Rachit. I think a very interesting perspective on loan and deposits both. And Remco, over to you on, I think, giving the perspective on how do you see compliance and regulatory challenges which you are seeing in Indian market in Reimagine mobile-based digital bank. If you have to give 3 advice to regulator on policy and what the regulator needs to do to favor a complete digital bank existence as a neobank and a full-fledged neobank, how do you see this advice, if you can refer to 3 key things regulators should do?
Yeah, that's a very good question. First, I would like to reflect a little bit of what Rachit said. So in Europe, there's been a lot of talk about growth over profit, which is a huge problem that has been seen amongst the neobanks, right? So if your business model is based on just seamlessly onboarding customers, but not really offering the products that are actually profitable, then you have a bit of an issue. Needless to say, I think that to the regulators, it's very important to understand new key developments in the market. Let's say machine learning, or more generally AI. Biometrics and open data also play a key part in the ongoing transformation, but no less important are the efforts to foster an organizational culture able to take advantage of internal and external innovation, which necessitates taking risks and not being afraid of failure. We need to see more investments in innovation in general, and we need to see banks to be a lot bolder than they are today. And that's hard, because as a bank, you're taught not to take risks. It's a huge change in culture and environment. States versus global VP finance, vertical equity development and partnerships at Huawei. This is also on the part of the regulator side. We need to see more innovation. We need to see adaptation of biometrics and these key technologies that will drive seamless customer onboarding. However, more digital transformation of incumbents is more concerned with step-by-step shifts rather than instant fundamental changes. Right now, it's more gradually moving forward instead of disrupting all aspects of business at once. Disruption, and also, let's say, in onboarding, will be catchy and FinTech buzzword, but certainly maturity is setting into an innovation market. I think that's what the regulator needs to understand is, as I highlighted earlier, is adoption of new technology. And this requires a synergy between FinTech companies, regulators, banks, and all players involved. And this is how we see it from our side. So we need to drive innovation across all fields. And this will only benefit everybody. Because if we do that, we can bank more people, we can give more financial services to people. And this is where compliance plays a key part. We see that, and you probably know that, and I'm actually eager to hear some comments from the audience on this. Biometrics in Europe are still a little bit sketchy. For example, there are 2 versions of onboarding a client through a mobile app. One of them is active liveness detection, and the other one is passive liveness detection. Now, we all know that active liveness detection is like, you know, when you open up a Neobank app, right? And you put in your credentials, they say like, move your head and make a picture of your passport. Passive liveness detection takes this to a new level. So with passive liveness detection, you could onboard a customer without that customer even having to interact with you at all. So that means that, let's say, only a few microseconds of a screen could put a risk score on a person, or could match that person to, let's say, a passport. So we will see some developments in the space, especially in Europe. And at the moment, there are security and privacy concerns that are heavily increasing around these kind of technologies. China and some of the Southeast Asian countries have already adopted this technology to a certain extent. And I think this is where the market will move. And this is perhaps what we'll see adoption in Europe and in the near future as well. And I guess in a country such as India, with such a large population, these technologies could gain massive advantage if the regulators adopt them as well. So let's see where it all goes. It's an interesting future to watch.
Very interesting, Remco. I think all of us are agreeing it is going to be a mobile first, with Reimagine all banking services being available on the mobile, with differentiator in its product and services and the way it's offered. I think there are some very interesting questions we've received. So we have a question from Vishal, who's asking that though online services are provided by PSU banks today, but not all services are online, and you still need to visit because the core banking cannot do change of branch and many of the other services. So Anuj, what would be your advice to PSU banks and private banks of a large? What can they do to ensure the whole customer service and any kind of change of accounts, static data, how can they be taken through a secured digital mode rather than visiting physically the branch?
Advising such big public sector banks is really not my place, honestly speaking. They've been in the business for such a long time and done great work. And I think it's not a question of advice. It's not that they don't know. Like I said, they're some of the smartest people. That's where the leadership team understands what's coming, what's not coming. But I think the way it works is that everybody needs to play to their strengths, right? There's something that they can do, they cannot do, and there's something that we can do and we cannot do, right? And that's how things will proceed. We partner with a lot of banks, by the way, and there are a couple of banks partner with a lot of fintechs. But even then, it's not that one of them is playing on the other one's territory. I mean, we've heard this idea before in India, especially maybe across the globe, that fintechs will eat the banks and so on and so forth. And I mean, I don't see that happening, personally speaking, because it's always going to be some collaborative effort. Even in Europe with the neobanks, etc., while there are a couple of people who've got full banking licenses like Starling or thereabouts. I'm not sure exactly about the rules. The existing banks continue to function because they provide a very different kind of flavor, maybe a different kind of segment that they will go after. So the advice is mostly to partner rather than try and change your DNA, because that's very difficult to do. Even in a smaller company like ours, if I suddenly have to go and start doing completely different work, it's a huge shift in mindset, aligning people. And that's not playing to each of our strengths. And I think that will be my advice to them. Because there are specific things like customer support and customer service. And those things are very, very tactical, if you ask me. And of course, we should do more and more. And it's a balance, unfortunately, between support and trust. Even today, for example, we don't have like a call center, somebody calling in, but people tell us that why don't you have it, right? Because it's my money, and I get very, very flustered. It's only up to us to innovate and trying to help them and get to the symptom rather than saying that the only way to do it is through calls, right? So that's the thinking that needs to get done. It's very, very tactical. There are tools and technology that's available today across the globe that they can do. But that's a very, very specific example. But at a larger level, I think partnering is probably a better suggestion from my side than advice.
Thanks, Anuj. And yeah, Remco, please go ahead.
I also would like to comment a little bit on this. There has been a lot of noise in Europe in the recent years that the neobanks would overthrow the traditional banks. But the reality, of course, is that an EMI institution, or what we call neobank, is reliant on the bank. So this is, in a sense, a bit of nonsense. And then there's another problem, and that has to do with core technology. So operating a bank is not the same as opening a coffee shop on the corner. There are many, many, many elements that need to be fulfilled in order to operate a full bank. And most core banking systems out there, and I'm specifically referring to some of the legacy ones like Fiserv or Temenos, they provide a piece of the cake, but they do not provide the entire cake. And building all of those connections when it comes to reporting, when it comes to settlements, when it comes to current account management or company treasury, or the link between company treasury and client treasury is extremely complicated. So that means that neobanks and traditional banks will survive together. They are different institutions. And when money is trust, and we should never forget that. So when it comes to really getting a mortgage for your house, it's still, even amongst the younger generations, known that we do feel comfortable talking to a real person when it comes to making such a huge financial decision. We will also see advancements of personalization and artificial intelligence in helping people and guiding them making these kind of complicated decisions when it comes to their financial life. So this is really where the neobanks play a key role. And they should be wary of the fact that retail banking is not profitable and need to move at one point to, the more profitable products. So interesting space to watch.
Very interesting, Remco. And next question, Rachit, is for you. How do you see the PSU have changed in the post-COVID era?
So I think very, very interesting questions. And I've been watching this very carefully over the last 1 year while we were still coming out of pandemic. Number one, I think the whole customer acquisition and the touch points are completely are going a paradigm shift in the PSUs. And that was somehow related to the question number one that was asked. What we've seen is that there are a lot of such PSUs, because of the aggregation of the PSUs, I think that has helped. Because the ones which have the stronger technology are the ones which we now see coming forward, and the other ones which were the old school have kind of merged with these. So I think that's one big advantage which has happened, wherein the Union Bank of India and the Bank of Baroda and the State Bank of India and PNBs are the ones which are now leading this whole bank. So that's number one. Number two, what we've also seen is that the kind of digital pieces which are now coming up, the systems which are now being putting up by the PSUs is a differentiator. Every PSU is now talking about an app. And what can we offer on that app? Can we, while being secure is one which is a point taken for granted. I think the kind of services that they're offering is very, very differentiating from each other. There are a lot of things where they're trying to build up the whole UPI QR, both the contact, both the QR through UPI and the UPI Connect on that application. What we have seen so far in the last 6 months is there's a complete evolution in terms of their mindset as to how we can actually provide services on the mobile, as you said rightly, the mobile age, and also in terms of how do we actually acquire these customers quickly. That's one thing of it. The other thing what is also happening is, which is very interesting, is that after the challenges which one of the largest private sector bank faced during the pandemic in terms of data loss and in terms of downtimes which they had faced, I think all these PSUs have really learned from that. And I think that's a great thing. And what I'm also now watching, and we as a company are also working very closely with these PSUs, is to make them cloud enabled. I think what is the mantra that we are now following is like the platform as a service. And that's where the PSUs have actually joined that bandwagon, which was a forte of those larger banks which had the RegTech and the technology to maintain and service those kind of customers. But I think with that, those regulators coming down very heavily on those larger banks and also the payment schemes to some extent, I think the PSUs are completely mindful of this and we have been approached by many of them in terms of how do we actually ensure a cost reduction, B in terms of service, C in terms of cloud. How can we actually do cloud native for them? How can we move the services which are the miscellaneous ones and which are the add-ons actually to the cloud, and the core bankings could stay in their data centers. I think there are many things which are happening. It's a very, very interesting space to watch.
So we have a last question, Anuj, for you, and this is from Mayank. who would like to know, in light of a lack of regulatory clarity, how do you see a decentralized finance evolve as a technology and a business model to improve the banking?
Yeah, so the only way you can work is when you work with existing banks, by the way, as a neobank, right? So when you say decentralized finance, I'm assuming what you mean is that how can you give individual products and services to customers and yet not be all in one place? I'm just taking that as an assumption.
Yeah.
So as Freo, by the way, like I said, that we have multiple offerings, right? From borrowing, from saving to spending, but not all of them are from the same one bank. So honestly, my customer in say, in Salem, for argument's sake, is probably getting a account from my partner bank A, getting a credit from my own NBFC, maybe getting a spending product from say my partner bank B. But I am aggregating that together on the Freo app and giving that to the customer. So in some ways, you are decentralizing finance, and honestly, that is the skill sets of how you work with partners till the time the license comes in. That's the trick. It's not so straightforward. The systems need to align, the tech needs to align, the customer view needs to align, commercials need to align, and that's the hard work that anybody needs to put in.
Excellent. Thanks, Anuj, for a precise answer. And thank you, Remco, Anuj, Rachit, for your amazing thoughts. I'm sure people enjoyed a very different imagining of banking services as we see. And Gitanjali, over to you.
Thank you so much, Chetan. Thank you, Anuj, Rachit, Remco, and Chetan for joining us today and for this wonderful discussion. Now we are moving on to our next panel, and to join us, go to agenda and click on next session. Don't forget to satiate your networking cravings by clicking on People tab to meet with our partners and other delegates on the platform. We'll be right back with you.
100 रुपये में बिटकॉइन ट्रेडिंग
पॉसिबल है,
इम्पॉसिबल
लगी शर्त और हारा तो It's possible on CoinSwitch Kuber. Download करो और Bitcoin में trading start. CoinSwitch Kuber, सिक्का चमकेगा.
Cryptocurrency is an unregulated digital asset, not a legal tender and subject to market risks and price fluctuation risks.
Where there is life, there is hope, there is meaning. But life has its downs as much as its ups. Life is about challenges. Life is about opportunities. Time for joy, time for celebration, and time to introspect. Thankfully, in every one of life's moments, and even beyond life itself, there's LIC. Where there is life, there's always LIC. Zindagi ke saath bhi, zindagi ke baad bhi.